Hey, wait, I just realized, why does, YouTube says this is public? Um, you guys not from the group? Anybody here not in the group? Is this public? What the hell? It shouldn't have been. Okay. Might have to restart it with a new link. Live streams are just for the premium group. Well, usually. Sometimes I do public ones. Sometimes I'll invite the basic group of Flux Trading Group, basic members, to come to a live stream. But for the most part, most live streams, especially where I do, marathons, just hours and hours of teaching and analysis and trading. um, Come on, it's Christmas. Come on, I'm Jewish, so Mazel Tov. Since it's Christmas, though, you guys should join the group and support me. That'd be nice. What do I do, guys? Should I? Fuck it. Whatever. I was gonna enter Cody on the 222 bounce too. Jesus, god damn it, my model is absurd. Look at this. All each of my dynamic supports every bounce. 55 EMA, 55 EMA, 99 EMA, 55, 55, 55, 99, 99, 99, 99, 222. It's ridiculous. ZEC, 222, 222, 222 bounce. Imagine if you just bought all these 222 bounces. Be absolutely crushing it. But seriously though, like, stop being a fucking Jew. You can support me and show your appreciation for all the content I contribute and all the help I offer in helping you learn, and you could join the group and support me. It'd be really nice, and it's a great way to show your appreciation to me, and it's a really great group because I love teaching everything I know. My trading strategy and techniques and models are all so simple, but they work really, really well, as you'll see if you don't already know. I mean, just look at ADA here. Look at the top of the cloud, one of my key dynamic supports, right? So normally, if we bounce off the top of the cloud like this, that's exactly where I'd want to buy, right? So if I bought at the top of the cloud as we were running up here, there were several instances where I may have actually traded ADA. I don't remember, but that's where I would buy as we're running up with that. We have that cloud wall. I've referred to a cloud wall recently. That's one of the terms I've used. A cloud wall is when you have a vertical wall on the vertical cloud wall. Is you sort of just have like an up ramp, and it creates a bullish trend line, and it works both ways. We also have a bearish trend line as a result of that, which you're going to see for the bearish model on Ethereum. But look at this, top of the cloud, support, support, support. This is all 55 EMA. The 55 fails. Where does it hit? Right at the bottom of the cloud, and the 99 EMA for double Ichimoku confluence over here. Ichimoku confluence again, top of the cloud, and the 99 EMA. Now we're sitting right at the top of the cloud. This is actually a really good time to buy into ADA as well. You could theoretically buy right now, place your stop loss 2.9% below, so your stop loss, no, it would have to be more. Yeah, it's a little bit too high. If you were to buy right now, your stop loss would have to go probably at least over 2.5% below your entry, and all you would really have is the top of the cloud to protect your SL. You wouldn't have the 99 EMA, so I wouldn't jump into ADA. A lot of these have potential entries. So MTL would have been a great one to get into. I wish I spotted that earlier, but I wasn't paying attention to it. I was back here. I got into some MTL trades lately. I've been in and out a few times because I knew that it was going to pump hard, and I made good money in short-term trades. I wish I just held it. If I had held it longer term, if I held it from the beginning of the month, last month, I'd be up a fortune right now. So too bad. I wish I did, but whatever. I'll get into the next one. Now we are going to see big pumps on a lot of these. We're going to see a lot of the alts are looking really bullish. So we have. You know what? Let me tell everybody in the group. So let me move. Let me actually do this. 1 second. Let's go get that. Let's pull that up so I can track that better. After that big retrace, I said we're going to start the next wave up, and sure enough, we did, riding along the cloud. See, so I kind of want to look for new entries now. The 4 hour is going to be the key, but let's see. The key here is going to be looking for fresh entries because I want to get into a few more trades, probably another 2, maybe 3 more trades. So, with these, all the alts that look really bullish now, I'm going to look at the 4 hour and I want to find trades that have some sort of confluence, right? So I showed you already when I was just kind of looking through stuff, I had showed you ADA, right? Let me go back to ADA because it was a good example. Where was it? So like on ADA, for instance, right? I was talking about how great my model worked for ADA and how accurate it was. How this entire run, at any point during this big run, every big bullish move can directly be tied to my model, right? So you can see every time we broke out big and had a big bounce, it was off one of the Ichimoku dynamic supports. Right now, we're sitting in a similar position for a big bounce up, but we don't have confluence here. So if I were to enter right here, my stop loss can go 2.5% below my entry, which means the top of the cloud is protecting my stop loss. My entry is here, my stop loss is here. If the price dips down, one of my main Ichimoku dynamic supports is the top of the cloud, but it's not perfectly precise all the time. Sometimes it is, like a big dump like this will bounce right at the top of the cloud, the bottom of the cloud here, but the top of the cloud here again, and here as well. But a lot of the time you'll get little wicks down, right? And I don't want to get stopped out. So I'd like to get into a trade just like this, and I would get into this trade if the 99 EMA was higher. So if the 99 EMA was right where the top of the cloud was, so I had confluence, right? If I had both of those support structures at the exact same place or very close to one another, I could enter the trade and place my stop loss below at least 2 Ichimoku dynamic supports. That way I would have that extra protection, and then the probability of getting stopped out is pretty low at that point. As long as we maintain this bullish heading across the board, market-wide, the probability of success would be extraordinarily high at that point. So I'm going to look for trades like that where I have multiple support structures in place. Link is a good example where it's starting to get really, really, really bullish because we have several different support structures across different time frames. So like if I were to enter in right now, I have the 222 EMA on the 4 hour, but I have the Stoke that's turning up, right? The Stoke is just turning bullish here. But if I dropped down to the hourly or looked up at the daily, you'll see additional bullish formations. So here on the daily, we have the Stoke turning up, right? Confirmed bullish. We already had a closure of the prior candle, confirmed it bullish. The last time we had a Stoke reversal, that run up was just from the bottom to the top here. So that was a 31% run, right? Before that, even larger moves. And we could see a bigger one based on what we're seeing with the majors. But again, we're getting really close to the big correction, or at least a big correction, even if it's not the big correction. But there are some other variables at play. So let me kind of come full circle at that. I have a good way to how to present it. So now that you know basically what I'm looking for, as I go through these charts, if I see something that has that confluence and I can get into a fresh entry that looks really bullish, I will. But I want to show you the couple trades I already have open, quickly run through those, and then as we're looking for new trades, I will explain the overall bearish model and recap that. Take a few minutes to recap that. We've been tracking it for months and months. I mean, everybody in the group's been aware of this for months, that the main target back when Ethereum was under $500, I was saying that the main target for Ethereum here, we were in mid 400s, right, when we were talking about this. The bottom of this run, I call this run from the bottom to the top absolutely flawlessly. This down here, I identified the bottom here perfectly, bouncing off of this horizontal support. It was almost 300. So I had gotten in, if you look and zoom in on all these trades, I mean, it was incredible. If I just held and didn't get in and out, I wonder, I might have actually made more money. I'm not sure. I'd have to check. Sometimes it depends. In some instances, I'll make more money if I just buy and hold, and sometimes I'll make more money if I enter in short-term trades. Like here, so short-term trade, big pump. I had gotten out on the correction, and then I bought back into the next bottom, made a lot of money on that pump, and then I got stopped out on the correction. And then big pump, I moved up my stop loss to lock in most of my profit, plus I took some profit, right? So then I get stopped out. I enter in, the price goes up 15%, I move my stop loss and lock in 10, 12, 14%, whatever. The price comes down a little bit, hits my stop loss, I take all that profit, and then when the price gets down to the next low and resets, I get back in, make money on the next leg up. So, based on how I trade, I make money on all these big moves up. But in some instances, when we're bullish for this long a period of time, sometimes it would be better if I were to just buy at the bottom and hold for that entire period, if I'm using leverage or something. But I think I did pretty well, so I'm gonna guess that during that run, I was probably doing better with my my technique. That said, let me clear at least some of this crap. I can't clear a lot of it, but I can clear some of it. I can clear some of the fibs, I think. Let me see. All right, well, so yeah, you can see this entire run right from the bottom. I mean, I was very precise on this bottom here. I mean, absurdly precise on this bottom, and that ended up being this main trend line was the run. Every time we came down and hit this trend line, I was getting into trades with the group and making an absolute killing. So the model was flawless then, and at that point, when we first started breaking out, you can go back and look at the live streams. I'm actually going to do that. I'm going to go back and pull my old live streams to use it to teach, because I'm going to end up teaching a class on this bull run and the upcoming correction, because when that correction hits, people are going to say, how the hell have you been saying for so long that this is going to happen and this is where it was going to happen? I knew where it was going to happen because of my model. So I called this run from the bottom with extraordinary precision, and I had said the entire time, I don't know exactly how high it's going to get. I'm not making some sort of official prediction that we're going to go for this long and this far. However, what I had said was the ideal, perfect, best case scenario for my model, to fit my model absolutely perfectly, where I can later on come back and say that this is a perfect textbook example, exactly how my model works and how I trade, would be to hit the weekly on the top of the cloud. So if I pull back and show you the weekly, the top of the cloud, let me zoom in here, show you, clean up chart a little bit. Now, what I was just showing you, all of my entries started right here. This was that precise, super precision bottom that I called. It was right here. After this correction, we had the run up, and then the Stoke turned south on the weekly. So that weekly correction on the Stoke coincided with the weekly correction on the price action. Now that was a 40% correction, essentially, right? Then we bottomed out, and then we started that next push up. That next push up, starting from down in the low threes, I specifically said the entire time, best case scenario is we run all the way up and get rejected right at the top of the cloud. I'm not kidding. If you guys have been around, you are more than aware that I've been saying this literally for months. I've been saying this for months. A couple months now, I've been talking about this. That is exactly what happened. And I said the best case scenario is we can make money on this huge run up, and then we can make money on the big correction. So I expect a big correction very, very soon. I think there's short term a really good chance we get a bull run here, which I will again show you in more detail on the shorter term stuff. Now, there are a couple variables to consider. I've talked about this a lot recently, how when we're hyper bullish, you have to ignore it. It essentially invalidates a lot of the technicals. So you can have the most accurate technical model in history. Back in 2017, I wasn't a skilled trader back then, but back in 2017, there were a lot of people who were, and people were saying, we're at, all-time highs. We're going to correct. We're going to come back down. And that was when the price of Bitcoin was at $2,500, you know? So the price eventually ran up to $19,800. And all of those analysts were anticipating a correction long before that. But we just kept running higher and higher. So when you're hyper bullish and you get into these FOMO runs where there are external variables separate from the TA, when there are fundamentals at play, and you have to consider market psychology, you have to consider certain people in the space and the influence that they have. There are so many variables at play when you're in a market that volatile and at that point gaining so rapidly in popularity. There's going to be so much FOMO, and you're not going to be able to accurately predict it based on the technicals. So the technicals do work a lot of the time. I can make incredibly accurate trades using my TA strategies and techniques and all of my models, but there's always going to be a gray area. So in theory, we could break through the top of the cloud here. And one of the things I've been saying is I expect to run all the way to the top of this cloud, get rejected at the top of the cloud, and ride down along the top of the cloud. That's going to be the main resistance. And you know how on the way up I was showing you on ADA, for instance, how we kept bouncing off the top of the cloud on the way up? Like, see how this big trend right here is going up on Ethereum? I was showing you on that other chart pretty much how every time one of these candles would hit, it was like the top of the cloud was going right along here. You know what I mean? Here, I'll go back and show you really quick. Any of these. I mean, I could show you on any of them. Well, it would have to be a 4-hour to show you the cloud thing, but let me show you. So, you know, I was showing you like every time we bounce off the top of the cloud, in this case, it's the 55 EMA on Bitcoin that's been the main support. Again, anybody else use the 55 EMA? This is my Ichima model. If you were trading Bitcoin and you were focusing directly on the 55 EMA, that was the support for the entire bull run. Every time we would come back down, the 55 EMA was the main support. It only failed a few times, and when it did, one of my Ichima dynamic supports ended up being the next support that caused the bounce, right? So we were riding along the 55 EMA, bouncing every time we hit it, and then when they finally failed, what ended up causing the bounce? Right at the bottom of the cloud. One of my Ichima dynamic supports. So, that being said, I explained on those other charts, like on ADA, how every time we're bouncing off the top of the cloud, that's essentially creating like a trend line. So sometimes we'll have this a vertical wall, right, where you're moving, you're going sideways, and you see there's like it's turning vertical. The cloud is just going straight up. When that happens, it's a really, really bullish sign. As you approach that vertical cloud wall, there's a high probability that you're going to pump up above to go over the top of that wall. Now, in the case of a bullish scenario like this, if I saw this cloud trending this way without even knowing what the TA was doing, I would have said, all right, well, I can draw a trend line right along, doing like a linear fit along the top of the cloud, and that would be a trend line support. Same thing on the bearish side. So when I'm looking at Ethereum, okay, so in the case of Ethereum, you can see the 55 EMA here on the 4-hour, for instance, right? Really strong support. So I could draw a linear fit and say, all right, if I continue that line, essentially, that could be an anticipated strong trendline support. So check this out. Just as a side note, for the short-term bullish scenario, there are several things at play. If you look at the daily, for instance, the daily Stoke is turning up a little bit bullish. If you're looking at the 4-hour, we actually have an ascending triangle here. Do you guys see it? Let me draw this trend line. If I draw that trend line up like that, check this out. Did you see that top side resistance right there? So we actually have this horizontal resistance. We have a triple top, essentially, right? And we're sitting right on this trend line support here. So that's why I entered into the short-term trade here. So I'm going to get back to the bearish model in 2 seconds. But we have a very, very bearish model, which, again, I'm going to continue showing you in just a second. But the reason why I'm extremely bearish on that, but I'm still getting into a long now, are twofold. One, this is an extremely bullish trade because we're right on this trend line support. We're right on a key horizontal support, which was that 581 level from before. We also have a reset on the daily Stoch. We have a reset on the 4-hour Stoch. Everything about this tells me that we're going to get a nice short-term bounce on the alts, including Link and the others I showed you, but we're going to get a nice big bounce on the majors too, specifically on Ethereum, more so than Bitcoin. So I'm really bullish for the short-term bounce here. The ascending triangle also tells me we could get a nice short-term breakout for several cycles on the Stoch. So we could easily make another run up. Well, probably one full run up can get up pretty high. But that being said, let me get back to finish just what I was explaining with the bearish model. So again, for months, I've been saying with this bearish model that once we hit the top of the cloud here, you can essentially draw this trend line. And that's what I did. I drew this linear fit where I said, all right, I'm going to essentially take a linear fit of the top of the cloud. And from here to here, that creates this trend line resistance. So even though you don't see a trend line there, you don't have any trading history there where you actually can draw a trend line based on, candle to candle where you're drawing an actual trend line. Just from looking at my Ichimoku dynamic supports, and you can see where the top of the cloud is, I've known that this trend line resistance was actually there going back 3 months because I saw the top of the cloud here, and I knew that once we get up there, this was going to be the trend line resistance. So sure enough, we very well may ride down along this trend line resistance. Now, since we're looking at a weekly chart, that's something you always need to take that with a grain of salt when you're trying to time these things, because even though this model is saying we are correcting, we are here, we are starting the correction right now, we already somewhat started it, but we are about to dump and go down for a while, I can say that all I want. But when you say that on a weekly chart, if you're just a couple candles off, because your timing's never perfect, usually when I come up with these calls, on the shorter term stuff, I can tell you on the hourly chart or on the 4-hour chart, when I say, hey, we're about to correct, we're right there, well, I'm only going to be a couple hours off, right? Because if I say, hey, we're about to correct, it's got to happen within 2 or 3 hours, the absolute most when you're looking at the hourly chart. If I'm 3 candles off, that's only going to be 3 hours. When you're looking at the weekly chart, if I'm 3 candles off, that's going to be 3 weeks. So I can't say with precision exactly when it'll happen. And that's part one. The other thing is, usually when we get up to the top, we'll max out or we'll be overbought on the Stoch, then we reverse and come back down, except when we get hyper bullish, like I was explaining earlier. When you're in a hyper bullish environment where the TA can, to an extent, become invalid, where the fundamentals and the market psychology at play and the FOMO will override that TA. It'll override the bearish TA model because there's so much bullish pressure being driven by that FOMO effect, right? So then you'll see something like this where you max out on the Stoch, and instead of coming right down, you go sideways for a little bit as the price continues to run up. So the Stoch is maxed out at overbought, still going sideways, like over here. We maxed out on the Stoch. Normally we'd come right down, but we had 4 weeks in a row where we continued to move completely sideways on the Stoch before we finally reset and came back down. We're seeing something similar now where we're continuing to run bullish while the Stoch is already overbought. So it's ready to come back down. I just don't know exactly when it's going to happen. I think it's going to be very, very soon because now we're finally at the main trendline resistance that I've been tracking for literally months. Ask anybody in the group. This is a public stream, so for people who aren't in the group, if you talk to someone on one of my threads I'm telling you, I mean, I can show you on the old live streams. We've been tracking this for a couple months, this exact level, this exact scenario for months. Top of the cloud on the weekly Ethereum model. It's absolutely incredible. I can write an entire textbook based around only this analysis that I came up with a couple months ago, where I not only predicted this bull run, but the ultimate target would be the top of the cloud here. I mean, I'm blown away that it worked out as well as it did. So with all that being said, there's one other thing to consider. Not only can it take a little longer for a correction to happen, but even though we're at this main trendline resistance now, there are 2 things that can happen other than it correcting like I expect. That correction can just cease to happen, right? There could be so much pressure from the fundamental side of things. There could be so much FOMO. There could be a lot of news stories, and all this new money starts flooding in through Coinbase, right? And all that buy pressure just drives the price to all-time highs, and we're up to a $2,000 Ethereum token in a month. That's obviously possible when you're getting into that FOMO market in a hyper bullish market. Anything is possible. Just look at 2017 bull run, right? So we could see something like that, but without getting crazy, something that's more stable, but still could see an invalidation of a bearish trendline resistance like this. We could still correct along this trend line. We can still correct along with the top of the cloud, but it doesn't have to be precise. It doesn't have to ride that exact level, especially since, remember, this trend line resistance here is just a linear fit, right? I drew this estimating where the center would be of averaging in all the values for the, like on a plot for the top of the cloud here. But that's not particularly precise, so I don't know exactly where that is. We could very easily see like a wick that goes up here to 680, right? So this candle could wick all the way up to the top of the cloud here, a little higher, maybe even all the way up to like 700, and that can come back down. And then the next candle starts with a big dump, and that goes straight down along with the top of the cloud, right? Follows along the top of the cloud here. So there are various ways this can play out. It doesn't tell you anything about the short term looking at the weekly. So again, the short-term chart, the 4 hour that I just got to do a short-term trade on, is looking really, really, really bullish. And what's not only possible, but very likely, is if you buy into Ethereum with me right here, there's a really good chance this trade can go well. It can get up to this trendline resistance. It's obviously capable of busting through the top of the cloud for a quick wick up and going all the way up to potentially even 700. That could happen. Then it could come down and correct. So what we could end up seeing is this short-term trade pumps really hard. Then we get out, take a whole metric fuck ton of profit, and then we can short, because we then at that point know the market's going to be coming back down. So you can make money going both ways. For those who were curious, this was my last Ethereum trade. I got in. I was doing quite well. I took some profit. It was a leverage trade, so I made a nice profit on the initial breakout run. And I have part of my position after selling profit. I have my stop loss right at my entry. So my original trade here, my stop loss is at the entry there. And if you look at where my new trade is, on my new trade, I got into a new additional Ethereum position. In this case, my stop loss is also right at that same level, right at the top, right at my original trade's entry. So in theory, both this trade and this trade, two separate positions that I'm in, two separate trades, right? I have the same stop loss. Not exactly the same, but very close. So if both of these were to dump, I would take a small loss of 1.5% on the new trade. I would break even on the original trade, but since I already took a lot of profit on the original trade, overall, even if Ethereum were to tank to $200 right now, I would still walk away with these two trades being closed, making a lot of money in the last 24 hours, 48 hours on Ethereum because of the initial trade I got into and being able to take profit on that leveraged position. So that's the plan for Ethereum. Short term, on the 4 hour model, this is looking really bullish. Yeah, so this is looking really bullish short term. The ascending triangle is also a really bullish sign. We could very easily see that final pump and then deal with the correction from there. So that's a refresher on my longer term analysis, the big correction. And one thing to remember as well, my big correction prediction wasn't just based on Ethereum. It was primarily from Bitcoin, and it was based on the monthly more than the weekly. So I just want to remind everybody that if you go back to the monthly, and again, I've been tracking this for quite a long time, we are very, very much overbought right now. When this does start coming back down, that's going to be the start of a 2018 correction, right? It's going to be a 6 to 12 month long correction. It could be maybe just 4 months, but it's definitely going to be more than, I think it's going to be over a half a year long, that correction. And that is going to happen. I don't know when it's going to happen. And the same principle applies here. It could happen within the next 3 or 4 candles, which on the hourly means 3 or 4 hours. But since we're talking about the monthly model, that literally means it could be within another 4 months. There's no way to know exactly when. All we can do is drop down to the next time frame down and try to come up with a more precise, shorter term entry. So in the case of the monthly model, I've been tracking this going back I don't even know how long. It's got to be a year at this point, where I was talking about this bull run that I was expecting all the way from the bottom. I was expecting that bull run based on this Stoke reversal, that we had this bullish Stoke reversal running up. So I thought we were going to run all the way up. But once we started turning south here, I thought there's actually a possibility at the end of the summer that we were going to start that big correction. And then we broke right through resistance a few times, and that's when I said, you know what, we're hyper bullish officially at this point. That's now like three major bearish models that got invalidated like nothing, and we just kept pumping higher and higher. And then you started seeing more and more news stories about Bitcoin. It's like, all right, we're having the FOMO effect again. We're hyper bullish. So at that point, I officially classified the market as hyper bullish, and most of the TA would be invalidated moving forward until we got to where we are now. So again, the monthly model is really the more bearish one, but there's no way to say precisely when that thing may come back down. It's sort of dancing and doing its own thing here, but all right, yeah, so that's Bitcoin and Ethereum. Longer term models, big bearish models upcoming. Been talking about it for months. Short term, we're gonna get a nice pump. I've never seen so many lines, he says. Well, dude, you kidding me? How about this? Wait for it. There we go. Oh, wait. How about this? Oh no, this doesn't have as many as Link. Link was definitely the better one. Even better than Ethereum. Link is the master. Although Ethereum is such a robust analysis that it's like, I have so many different colors and different types of support and resistance. At one point, I was doing different types of labels, where this was strong support zone versus a minor SL, or minor SR rather. Yeah. All right. Correction targets. I'm not going to worry about that now because we're talking about a long-term extended correction. I wouldn't even start to speculate what the targets would be until we know when the correction begins. Then we can start considering potential targets. It's so far out, and there's so many unknowns and so many variables between now and then. There's just no way that we can even come up with a rough target, really. I could say, like on Ethereum, though, all right. Was there a question? Well, how about this? Before I dive into other stuff, anybody have any questions? Because we went over a lot of stuff. I discussed a lot of topics, and I reviewed a bunch of analyses. So, does anybody have any questions about the stuff I broke down? I went over a lot of stuff in a lot of detail, so I'm sure some of you guys have questions. Feel free to ask. I don't do these public streams with this much free content very often, so if you're not a member of the group and you're a cheapskate who's here for free and you want to steal my knowledge and hard work and dedication for free without showing me some support, then that's fine, because if I was in your position, I'd do the same thing. Chew power, bro. But if you have any questions, feel free, go ahead and ask. How would you determine the correction has begun? Seems like we've smoked so many almost corrections. Well, yeah, that's what I was just explaining, right? So we're hyper bullish. We're officially in a hyper bullish environment. So a lot of corrections are either invalidated, but I gave a couple other scenarios. We could push a little bit higher and get a final pump, then drop into the correction. And there are a few ways it can play out. But if we start to dump along that trend line, and it's a significant dump, and it's not a minuscule 2 or 3% over the course of 24 hours, if we're taking 2 or 3 multiple days of correcting, and we're down in like double-digit correction town, then I'm more inclined to say we are in that correction. One of the things I have to do, which I haven't had a chance to do yet, is go back and look for other similarities between now and 2017. So I've been reluctant to do so because we haven't gotten all the way to that point where I feel like it's imminent. But it's certainly in focus now. It's like that model, that bearish model, is coming into focus. It's getting really close. I've been saying for months now that it's getting close. Well, now it's here. Like it's here. It's just, when is it going to drop? When is that hammer going to drop? In my opinion, we're there, and we should be correcting now. We should be in the big long-term extended correction now, and the only reason we're not is because we went hyper bullish, because we went mainstream, new mainstream media talking about us again and shit like that. Also, something else to consider, another variable at play here, and again, this is why it's so important not just to focus on technicals. I talk about my FATAPAMP model all the time, FATAPAMP, FA for fundamental analysis, TA for technical analysis, and then people and market psychology, PAMP. And it's important that you use all 4 data sets when you're analyzing markets and charts and you're trying to identify potential trades and investments, because technicals alone are not always going to give you all the answers. There are too many variables at play. So in this case, while the technicals are telling me, hey, we're about to correct and we're going to correct big and hard and long, that's good to know. But look at all the fundamentals at play. We have a huge FOMO effect going on right now that is driving the prices much higher on a daily basis. We have potential stimulus going down, right? So we might actually see Congress get together before they recess for the holidays. Congress might actually get some sort of COVID relief passed. If that happens, we're going to see a major pump. So even though the technicals are screaming that we're going to correct big and long and hard, there is a very realistic possibility that we're going to get those fundamental FOMO injections, and we're going to see major buying, which is going to drive the prices higher once we get a passage of COVID relief bill or other things, right? So there is a lot going on, and it's really hard to say. The best you can do is come up with a way to just rapidly adjust your model as needed. So like right now, for instance, I'm short term, very bullish. I am mid to long term, very bearish. But I'm not specifying any sort of point when I think that switch over is going to happen. I'm just prepared for it, and I know that when it does start to happen, I'll be able to reevaluate on the spot. So again, looking at Ethereum, for instance, if we're tracking Ethereum on the daily or the weekly, if we start coming back down and we're losing, from right here, let's see. What was I just going to do? All right, were there any other questions? If not, we can dive in and take a look at some of the other charts, and I can see if I can spot some other short-term trades I can get into right now. There are definitely a lot of really bullish-looking setups right now. It's just a matter of finding the ones that have confluence, where we have multiple support structures in place to protect our stop loss. Then we can get in. We can accurately protect our SL while establishing a good entry. So yeah. So stupid. Nice. I don't see any questions on the chat. Let me see in Discord if anybody in the private group had any questions. Doesn't look like it. Where is everybody? Everyone's so quiet tonight. Usually I get more comments and stuff. I'm so tired, so I'm going to go to sleep. I'm just going to run through some more charts with you first and see if we can spot any other good short-term trades. Just to recap, I have my BAT trade, which I think is looking incredible. See how we're in the cloud. We have strong support from the EMAs. YFII, I shared some trades on YFI and YFII, both of them. Actually, here. There's UD2. So I was making just some in and out trades. I took profit and made some good money on these guys. But I had long-term models set up for them, and I haven't gotten back in yet. Should actually have a chart with them on it, but oh wait, maybe. No, I'm not hiding everything. That's weird. I should actually have a chart that has those entries and stuff. Yeah, I trade band. I trade INJ. I trade them all. I trade literally everything. All right, no other questions. I'm gonna go grab a drink, and then we'll run through some more of these charts. Oh yeah, I was showing you just a recap. So, BAT, BAT. I watched the video I put out on YouTube. It's hard to explain. It's like the model is like really perfect for this run, but if it doesn't materialize, like there's a very real possibility the support will fail and my entire analysis will become invalidated. It's very possible because there are a few things that I've noticed, which I mentioned, where we didn't see things lining up on the different time frames. Usually they are. Normally the 8-hour will match up with the 4-hour and we wouldn't see that discrepancy. Since we have that discrepancy, I was thinking, all right, maybe something's off on these charts, and the entire analysis I came up with is all a big mistake, and that little variable is going to ruin the trade, and then it's still theoretically right. It's just my timing and my entry is wrong. So if that happens, I will get out of that trade and I will get back in later on, and hopefully the next time I'll get the perfect timing and the right entry. But there's still. You gotta use my Ichima model. Here, my Ichima indicator. Ichima Dynamics. Just go type in Ichima Dynamics by Jesse Feinberg, and use that, and you will get my Ichima indicator with the 3 EMAs. It's a single indicator. So if you have the free version of TradingView, if you're a cheapskate, much like you won't join Flux Trading Group, if you won't pay for the paid version of TradingView, and you're limited to how many indicators you have, using my Ichima Dynamics indicator will give you all 3 EMAs, the 55, the 99, and the 222, and it'll give you the Ichimoku cloud with the pre-configuration of the right settings, which is 20, 60, 120, and 30. In addition to that, you want to add the Stoke oscillator, not Stoke RSI. You want to type in Stoke for stochastic, and the settings I use are 533. And that's the other major model that I use, my Sith Stoke model and my Ichima Dynamics. I still haven't gotten up to get a drink. Every time I say I'm about to, I just end up sitting here twiddling my thumbs because I'm super tired. Because I have 3 kids under 2, and everybody's sick, including me and including the kids. And what else? What else? What else? I don't know. There's so much stuff. So much going on. Ugh, what a week. Hopefully you guys have had a less stressful week than me. Let me go get something to drink. Anything you guys want me to look at, I can look at maybe like 1 or 2 if you guys really want me to. Mostly I'm just going to go through my watch list for a couple minutes and see what other trades are available that I could potentially get into. I'll let you guys know if I do get into something, or if I like something, I'll explain exactly why. Maybe we could do a fresh live analysis like I did with my bat trade on my video earlier. If you haven't seen that on my YouTube, make sure you go to YouTube. Go to YouTube and subscribe to my channel for sure. It's just Darth Crypto, so just go to youtube.com/Darth Crypto, subscribe to my channel, and look at the video I posted today with my BAT, my bat trade. I just sort of threw it together live. I just spotted it. I spotted a few things, and I did my analysis like on the spot, so you guys can sort of see how I go through my process when I stumble across something like that. All right, I will be right back, and then we'll take a look at some other charts and see if we can find some potential bullish setups. Oh, hey, sorry about that. It took me a minute. I accidentally, I got held up. I accidentally fell into a bowl that, like, somehow lighter lit the bowl. I accidentally fell on it, and, I don't know. I don't know what happened, but like I just kind of slipped and smoked a bowl. So anyway, now I have Oreos and they're fantastic. Oh, so good. Fucking love Oreos. All right. Were there any questions from the stuff we went over before? None, right? We're good to go. We can just kind of cycle through some more of these guys and see what we can spot. Let's run through, see what we can find, if anything. Any questions about my bat analysis that I posted earlier? Like, here's an example, right? CHZ, which riding the top of the cloud perfectly, but I really like, well, the Stokes sort of wishy-washy. It's doing the zigzaggy thing where it's not giving like a clear, well-defined reversal here. So I'm not completely sold on it. If I were to enter here, stop loss could go down. Oh, you know what? That's actually not terrible. So that's pretty good. The biggest issue I have with CHZ is its propensity to wick out, right? So it's got a lot of these big wicks. It's not highly liquid, so the order books can't really handle too much if like big money starts going in or out. So it's usually something I'll make some plays with like a smaller amount of money, but nothing too big. But right now the order books don't look terrible, so might work. Let's see. We're right in the apex of this triangle. Got support and resistance kind of coming together, right? If I extend this out, I bet it fits perfectly. Look at that. I knew it would, even without checking it. I just intuitively knew. So yeah, we're right in the apex of that triangle formation. We're riding along the top of the cloud. If I were to enter right here, not only do I have that trendline support, the top of the cloud, the bottom of the cloud, the 55 EMA, and the horizontal support at 12.4 right here, right? Although that support is an old one, and it doesn't look like it's particularly valid anymore. I mean, it is a little bit, but again, the wick game is so crazy on CHZ. These wicks just go everywhere. But you can get in, put a stop loss just 2% below your entry. It's not a terrible trade. I'll probably look for some other setups too first, but something to keep, remember it. I might come back and make a move on it if it doesn't do anything in the next, 10 minutes. TRX doesn't have too much going on here. BNB's crap right now. Now, FTM and FET, I made some buku bucks recently trading those guys. So I'm always looking for potential setups with them. So, should I pull the trigger and take this trade on Link? There's a nice support resistance right at this level too, so we should definitely mark that off, because check it out. Right where we are, look at this big dump, right? From this big correction, it held right at this level, right? We have all this trading right at that level. Look at all these candles that are holding right there. I mean, there are a few candles that break through, obviously, but there's a ton of reversals that occur right there. All these candles down here, right? We're all sitting right along that support. Go back over to here, you'll see something similar where you're getting wicks that are breaking through, but a lot of these candles, the bodies of the candles are holding right there. And then like over here, for instance, same thing. Like it would be a little bit higher. It would be like further up here, which makes this a range. It's not like a very precise support and resistance where it hits that level and it instantly reverses, but you can see there is definitely a range here. Maybe from down here, like 1294 up to 1320. Like that range is where all that support is over here. So, and also look, we got a big rejection right at that level over here too. So it's certainly viable. I would love, that would have been really cool if we had more of like a falling wedge. This is my favorite bullish formation. Look at that. Boom. Nice trendline resistance. In the case of Link, I would probably get in, but wait until it breaks above this trendline resistance. Because once it does, it'll have a nice strong trendline. Check that out. It's pretty good, huh? Similar to what CHZ was doing, except much more liquidity here on Link. So in this case, we are, again, in the apex of this triangle formation. The 222 EMA is holding well. The trend line support was holding well. Now we're looking at the 4 hour. If we drop down to the daily, we have the top of the cloud right there. And the top of the cloud has been particularly strong right here. Really big, strong breakout from there. In this case, we had a big dump. If it wasn't for that big dump that was just eating up all the buy orders, right? If it wasn't for that and there was a little bit more stability in the market at this point, if that was a slower correction instead of such a rapid descent, I bet the top of the cloud would have held. And you could tell because that's where the bodies held, meaning that's where those candles closed, you know? Oh, my God, I love Oreos. And I'm liking the fact that it's in that apex. It dramatically increases the probability of a larger breakout. Up or down, it could go either way. But since we have a lot of supports and since the majors look like they're going to make a push up, at this point it's probably 70-30. 70% chance we go up, 30% chance we go down. Might even be a little bit more bullish than that. Why did the chat die? Looks like somebody said 01 intro. I don't even know what that was supposed to mean. Nobody since then has said anything, which is weird because everybody was talking more. Is the chat still working? I didn't deactivate it, right? Somebody just say something just so I know the chat still works. All right, I think Link. If I bought Link here, that can work. I could buy Link here and I can set my stop loss just 2% below my entry. Okay, so I guess the chat does work. Yeah, I'm gonna get some Link actually. I think it's worth it. It's worth the risk. Stand by. Let me buy some Link. Also, vaccine coming out is another big deal, too. That's something else that can say, all right, well, right now we are pretty much from a technical perspective. We are at December of 2017. We're pretty much exactly where we were in 2017. If it was purely the technicals, right? So I'm seeing huge corrections coming up that are imminent, right? Massive, long-term, extended corrections that are imminent. However, it doesn't appear that we're actually getting those corrections, and that's because of those other variables. That's why I reminded you of my FATA-PIMP data analysis model, right? Where I don't just rely on TA, right? I'm not just relying on technicals. I'm utilizing additional data sets as well, and that's the reason, right? So now we have COVID relief can be coming through Congress over the next couple weeks. That's something that's big. We also have the vaccine, which dramatically changes things. The fact that the vaccine is going to be going out pretty soon is something else that can cause the market to pump hard, and not just equities and securities, or not just traditional asset classes, but crypto and even Forex. We could see the dollar perform. We could see a lot of action based off of that news. So it's certainly not purely a technical game right now. You need to be able to look at alternative data sets. So make sure you're aware of what you're looking for. And if you have any questions, let me know. And if you need help, if you're in the group, if you're in the premium group, let me know. We can get on the phone and chat anytime. And if you're in the basic group, obviously there's still resources in the group. You can use the chat and ask other people questions or ask me questions. But you want to make sure you know how to look at that fundamental stuff. All right, so I grabbed some. I just grabbed some link. I'm just gonna I gotta make a chart for the group so I can show the guys where I got in. So the only issue here is I'm setting my stop loss right now, but if you look right here, see where all these candles held, all those wicks right there, right at 1291. If you follow that right, you'll see split candle right there, support that candle right there, and both of these candles right here. There's actually a decent support right at that level. So the issue with that, the only downside with that is my stop loss is pretty much right at that support. I really would like to have it a little bit lower. I just don't want to risk up to 2.5% on this trade. I'm trying to limit my risk to 2%. I'm going to take it from there. Assuming we get the breakout here, I'll figure out how to play it on the upside. I'll move my stop loss to my entry once we break above the EMAs here. If we get above the 55 and the 99, I will move my stop loss up to my entry. That makes the trade officially risk-free. Usually what happens in this scenario is we'll break up above the trendline resistance and then come back down and test it again. It doesn't always have to happen, especially if there's additional horizontal support there. There's a decent chance that horizontal support can catch us and bounce us up before we get back to that trend line. So there are a few ways it can play out, but I mean, it's a medium risk trade, certainly not low risk because my stop loss is 2% below my entry, so that's at least medium risk. But we're getting into the apex of a triangle formation. There's a lot of support structures in place. So there's a decent chance we can make the move up from here. And if we do, given the fact that we're apexing in the triangle like that, it's usually a decent opportunity for a larger move. Now, it's not as bullish as it would be if it was an ascending triangle or a descending triangle as far as the higher probability of a larger breakout move. But a symmetrical triangle like this forming a pennant structure is still bullish, or it still could be bullish, and it could still give a larger breakout move in one way or the other. And that's really what I'm looking for. If it does break out big, then if it goes down, it'll stop me out really quick and I'm out. But if it breaks up, then I'm going to be making some real money. So. Let me clear that so it doesn't confuse everybody on the chart. One second, guys. Alright, it's tired. No, it's tired. I'm tired. I'm gonna crash very soon, so let's keep running through. Let me see if I can find anything else. Pardonnez-moi. So, like you'll notice, there are several assets that are coming down, right? That are in the middle of a downtrend. Those are the ones that were running more recently. The ones that didn't run more recently, that were kind of hanging back, those are the ones that are pumping now. But some of these have a trend line that are getting that are pretty clear, but you can see on the Stoke, like, there's a pretty strong trend line coming down. We poked up for a minute on Algo, but I got rejected. I would want to go back and see how this doesn't look like a very strong support other than recently. Let me look at the other time frames. Now, I wish the Stoke was a little clearer. I don't like when it's zigzaggy like that. When that happens, it makes it a lot tougher to use it to identify patterns. But so the hourly is approaching a reset, right? So that's going to reverse and bounce, most likely. It looks like it could potentially bounce in the next candle. Oh, no, that's 48 minutes away. I don't know how this is going to play out. I'm definitely not going to touch Algo. I'm just trying to see if I can get a read on it. The daily's not quite there. We're into the cloud slightly, but not enough. At this point, we could still come out of the cloud without ever truly, really being in the cloud. I mean, technically we are, but it's hard to explain. Yeah, I don't like doing anything. I don't want to do anything with that. Dude, who are you, and have you even heard me talk about RSI? I haven't even mentioned RSI. What the fuck are you talking about, and why are you coming into my live stream to break my balls? Fuck off. Why not suck a dick? How about that? That's a great idea. Fuck off, dude. Get out of here. Seriously. Loser. I wish the Stoke was closer to a reset. Yeah, that's not looking good, really. I'm liking the ones that are sitting above the cloud. Those are the ones that look the most bullish. I wish there was more support there for ADA because it looks really good. I love the fact that, like, this correction, it's kind of, oh, I don't know. This is hard to read because it was kind of a big pump, and then I'm not sure what to make of this dump and immediate recovery. It kind of throws me off. It's a little weird. Yeah, see, I don't trust this. It looks weird. I'm not sure what's going on there. I'm gonna leave ADA. I don't want to mess with that one. Come on, there's got to be something else. Something else that looks good move. Can't touch when. It's not. It looks like it's starting to build up momentum. Except you can see. I mean, Stoke's getting pretty high, and it looks like it wants to reverse and come back down. So I would not touch it. Man, vet has been on a tear. See my vet entries? Look at those. Like, I had some insane vet entries. That's a good example where if I had just held it, right? Like, my model was perfect. I predicted extraordinarily, like, absurdly accurate and precise entries on vet. Um, Short term stuff. And again, with the market being how it's been lately, we're kind of in just a buy and hold market in some contexts. Not all the time. In some cases, trading is the way to go, but there are some cases where I would have made a lot more money by just buying and holding. That's just not my style. I'm a day trader for the most part, but like in this case, I mean, I did really well on vet. If I had just bought and held it, would I have actually done better? No, and the reason why not is because I caught, 71% profit on my initial entry, plus I bought more here. I missed out on the next push up. Also, if I bought back in after the dump, which I should have, I mean, look where the support was. It was all at the top of the cloud in the 99 EMA. Those are my supports, right? I've been teaching you guys that. I've been saying the top of the cloud and the 99 EMA, if we bounce off the top of the cloud like that, that's exactly when I want to enter. Then we were holding on the 99 EMA with a vertical wall cloud. I mean, that's like textbook exactly when I was just teaching you guys. That's when I enter, right? So I didn't get in just because I figured it was risky at that point in time. But one of the important things to remember is if I make 75% profit, right, and you buy that same coin and you hold it indefinitely and you make 100% profit, think about the fact that I got in and out in the course of, 10 days or 15 days, right? And you held it for 3 months, so your capital was tied up. So in that same period of time, I made 75% on this one trade. You might have made more on that, but I was able to take my money that I made from vet and put that into 4 or 5 or 6 or 7 or 10 other trades. So that's why short-term trading and day trading is beneficial over just buying and holding in some cases, because you have that capital to work with. Once you free up that capital, you could put it to work and build upon it. Can't do that when it's all tied up in a particular position. So I think vet is just absurdly bullish right now. I don't even think it's too overbought. I would honestly not have a problem buying into it. The only issue is it's just too risky at this point because I don't have a good entry. I only buy in if I have a nice tight stop loss that I can time my entry to. I could buy in close to a stop loss to ensure that to have a pretty tight stop loss. It has to be right. Essentially, I have to buy in right above a support, so my stop loss can go right below the support. That way, I'm protected. If I don't have a good support in place, if it's out in the middle of nowhere, I'd rather just stay away. So FTM looks like it could be getting close to a reset now. We're getting pretty low on the Stoke. So this is interesting. I actually like FTM here. I've done really well on FTM, really well in the last couple months too. There were several trades, especially on this run up. Like, man, I made a killing on this run up. It had to be like 250%. Um, All right, hey asshole! I don't hide behind a fake name. My name is Jesse Feinberg. I've never been private. I've never been anonymous. I've always shared my LinkedIn profile on Twitter. I'm not anonymous, loser. You're the one who's going to some asshole with a Darth Vader avatar's live stream on Twitter to break his balls about squiggly lines on a chart. Get a life. Go get laid, you fucking tool. How do I ban you? I don't even know. Yeah, go fucking blow something up, tool. I've never had to ban someone on YouTube. I don't even know how to. But fuck that guy. Loser. You know what? So I like FTM just because there's so much goddamn profit to be made on this one. Um, if I could find an entry, so I like the fact now. Let's see how the Stoke cycle is in FTM. So we're coming down into the cloud, and we have crossover right here where we have the 222 EMA and the 99 EMA. So those are crossing over right here. Look at the EMA. See how the 99 EMA and the 222 are providing a lot of support right there. So that crossover right here and the bottom of the cloud is right there. It's a tough call because we're still in the middle of this downtrend. But let me explain why it might actually be worth it to jump in. If it was a little bit lower, it would be worth it. It's kind of questionable here. So I'm going to enter FTM, I'm pretty sure. But if I enter it right here, it's going to be a medium high risk trade. If it got a little bit lower, it would be a medium risk or medium low risk trade. Um, do I pull the trigger? So I like the amount of support that I have here. I like the fact that, well, see, 2% is still a decent amount of risk. Um, All right, I think I'm gonna do it. I'm gonna grab FTM. See, look at this. Just like flipping through these, bottom of the cloud, right? Killer support. Imagine if I were to buy in right there, would have been insane. Right here, bottom of the cloud, major support before the big bounce, right? Like, it's such a simple model. Just having those dynamic supports. Bottom of the cloud, boom. Each of my dynamic supports, the EMAs, my key EMAs, top of the cloud. All right, fuck it. I'm doing it. It's getting late. I'm really tired. And I want to go to sleep. I'm just indecisive right now. So there's a lot of support here. Right now, this is going to be a higher risk trade. So I just don't want people in the group to jump in thinking it's something low risk. Ideally, I would wait on this. All right, you know what I'll do? I'm going to get in. I'm going to put, instead of, like, sometimes I'll get in halfway. So if I were to put, say, $10,000 into a trade, instead of buying $10,000 of ABC token, sometimes if I'm not sure about the timing, or if I feel like I want to get it a little bit lower, or if it's a little bit too risky, right? What I'll do is I'll put $3,000 or maybe $5,000, right? So 30% or 50% of my position, I'll get in partially. And then if it goes the way I expected it to, I can always add back in later. I mean, I might pay slightly more if I miss the exact bottom, but at least I have more confidence and it's lower risk, right? I'm more confident that it's going to break up because it's already starting that process. So there are benefits to doing it that way. And if it doesn't go my way and I end up being wrong, I don't lose as much because I risk less. I also have a tight stop loss regardless, so I'm only going to lose 2% no matter what. If I put in less money, I'm going to lose even less money. And then the other possibility is it could come down a little bit lower, hit the exact bottom of the cloud, and then launch. And if that happens, then I actually have an opportunity to buy in half now, half then. My average entry price is then going to be right in the middle. So I'm going to have an even better entry price than I would if I were to buy right now. So I'm going to do that. I'm going to get in. I'm going to buy here. And then I will potentially get more if we dip a little bit lower. So I'm going to buy some pretty much right where we are, but also a little bit slightly lower. So from like 21.05 up to the current price, I'll set a few orders. I'm going to get some FTM, and then we'll see if we get the support from the bottom of the cloud and the EMAs here. Then we'll see what happens. If we get the support and it holds, I can move my stop loss up and reduce that risk pretty quickly. All right, let me set that up. All right, anything else looking good? Anything else looking good? XRP is semi-interesting. So we have the 55 EMA is holding really well, right? So you can see the cloud is the EMA rather is holding really well. The top of the cloud again. Look at this. The top of the cloud, guys. Right, for people who are newer, people who aren't in the group, or people who might be newer to following me. I mean, you got to admit, is this not completely fucking insane? Like how simple my strategy is and my model, the way I use the cloud. Again, look at the top of the cloud with Confluence with the 55 EMA, right? Top of the cloud here with the 99 EMAs right there for extra Confluence. We bounced, hit the top of the cloud, bounced, ran right up against the same vertical cloud wall, just like I explained earlier, right? Same thing. Riding along that the entire way up. It's like free money. If I was watching then, if I was paying attention right when we hit the bottom at that point, which was, a couple nights ago, I wasn't watching, but if I was, that would have been an easy entry, and it runs up at 12%. Could have done that with leverage and made a ton of money. So right now we're seeing something similar to what we have on the others, where we have a downtrend now, but it looks like it's either done or in the process of completing. No. If I go down to the hourly, you can see it more well-defined with this downtrend. But, I mean, even then, the bottom of the cloud, again, and the 222 is holding really well. We're riding along the hourly EMAs here. Now, the Ichimoku dynamics on the hourly here don't work as well on XRP, but it looks like... the hell? Do I do anything with this guy? Whoa, what's up with the chat? You don't think... Folks are in... price action bounces. You don't think... The short from the yellow MA was the trade? I don't know what you're talking about. No, I short all the time. It goes both ways. There's nothing about my strategy that limits you to long any strategy really. So if I'm treating the EMAs in the cloud as support and resistance, right, it works both ways. Just like this is support now at the top of the cloud, coming down into the top of the cloud. I would buy right there, and then I would ride it up. My entire model that I've been predicting literally for months, like not exaggerating, for months, I've been saying that we are having a bull run, which I bought in at the very, very, very bottom of Ethereum, and we're going to run, and then the main resistance is going to be the top of the cloud, is going to be the perfect scenario. We run all the way up, get rejected at the top of the cloud, and get rejected and come back down along the top of the cloud, with that top of the cloud serving as the primary resistance and having a trendline resistance that we could potentially ride on the way down. That was my model going back literally months. You can check the public live streams on my YouTube channel. On some of the public live streams, we talked about my long-term correction that I expected, that the big bearish model. Any of those live streams where we talked about Ethereum, I showed this exact model, and I said the top of the cloud is going to be the main resistance. So this is where I would short. So since we have the top of the cloud, that main resistance in play right now, and we're probably within 1 or 2 candles of this going down, we're going to see that correction. Since we're hyper bullish, you can't just go willy-nilly shorting, right? You have to be more cautious, and I have no intention of shorting really anything in the market because we're hyper bullish in the middle of an epic FOMO-induced bull run. It's really stupid. You're throwing money away if you're going to be shorting, so I have no intention of shorting. However, when the time does come to short, this is what I'm going to be using, this very analysis where I say, okay, we are at the main resistance. We're going to drop down from here. The stochastic oscillator is starting to come back down. We're seeing that reset, indicating a confirmed bearish reversal, showing that the momentum shift is turning down. And then maybe another couple indicators that are suggestive of a correction. Once I feel confident that we're going to continue going down, I may enter into a short. But I have no intention of shorting now because we're in a bull run, which, you know, you don't short in a bull run. Hopefully that answered your questions. All right, so at this point, you know, before I go to bed and crash, I may make a move on XRP. Possibly. I already have Link going, but I need her to make a move and get above that trendline resistance. I can't believe the consistency with which all of these altcoins have a very similar trend line. Now, in this case, we actually have a hidden ascending triangle, which could potentially be an ascending triangle reversal pattern, where we are headed down because of that big dump, but this could be a reversal. For those who don't know, a hidden ascending triangle is this, where you have essentially a perfect ascending triangle, right? Big wick from right here, big movement right here with these candles getting rejected, big movement here, 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 all these candles, tons of resistance from the main trend line resistance, right? The main horizontal resistance at the top forming that triangle formation, but it was broken at one point in the middle. So pretty much everybody out there who knows a little bit about TA, and a lot of people who are quite proficient in TA, would say, well, that is not an ascending triangle because the resistance is broken. That is no longer an ascending triangle once you break the resistance, right? Now, my position has always been that why not, right? If you think about what's going on behind the scenes, and this is something I break down in educational streams, we don't really have to go over it, but just to quickly explain my thinking, if you consider what TA really is, it's stuff is going on behind the scenes, right? So when you keep getting rejected at this same level, right, all that means is on the order books, there is a really big sell wall, or for whatever reason, people keep selling at that level. So whenever people start to buy the price and the price goes up, there's always a lot of that particular asset being sold right around that price range. And that makes it so that price range, that particular price level, is very hard to break. So if that's what causes a horizontal resistance like this, it's possible that whatever is causing that to be the case, whatever is causing that wall to be there, it could be a single trader with a big sell wall, it could be a group of traders, it could just be a coincidence, it could also be an effect of something like, there's bots that are running that are trading that particular asset. There's various reasons, right? If that, whatever's causing that resistance to form, temporarily goes away and then comes back, that doesn't invalidate the model, right? So what's happening behind the scenes is still there. If it's back and that resistance is now back again, we have a chance to break out like we did last time all over again. We still have the same bullish formation. You still have an ascending triangle, just we temporarily lost that resistance. Whatever was causing that resistance just temporarily went away and then came back. So when people say things like that, people who are, textbook analysts who aren't self-taught, who actually learn this stuff professionally, or or think that if they haven't read it in a textbook that it can't be true, they would say to me, "Oh, well, you're wrong. It's been invalidated. It's no longer an ascending triangle." And I think those people suck because those people can't think outside the box, and it's good to think outside the box. If you understand what's happening behind the scenes and you know what does it mean when you have a resistance level like that, and you know, okay, well, that means the order books, and that this is how the order books look when you have the resistance like that. If you know what's happening behind the scenes, then you can fully understand what's going on and make sense of it. And in this particular case, it's a perfect example where if you know what's happening, you know that you could actually ignore that breaking of the resistance and still consider it an ascending triangle. So, got rejected from the top, testing this trend line support again. Same thing. We're consolidating within that apex. Right there. So if we get the trend line support here, keeps holding, this could be a potentially good entry. Let me see. See again. I gotta go to bed. I really, really like this potential setup here, and it would have been perfect down here, because down here we had the 222 EMA, we had a prior horizontal support and resistance, which is no longer that relevant. It hasn't really been holding that well, like I explained earlier, but we have the 222 EMA, and we have a trend line support. So back over here where all these wicks kept bouncing off the 222, if I was able to buy right there, right, if I could enter in a buy order right there, my stop loss can go just below that 222 EMA, just like that, right? So my stop loss would only be 1.4% below my entry, right? That's a pretty low risk trade. My potential loss in that particular case would be pretty damn low. Now that we're a little bit higher, if I were to make a similar trade, I want to place my stop loss below the trend line support, but you'll notice that occasionally you get these little wicks that come down, so I'd want additional support. So instead, I would be better off placing my stop loss below the 222 EMA, since that's where all these other candles held, right, on those little corrective moves. And we're coming down a little bit more right now, getting closer to the surface. So that's actually not that bad. See, still, if I were to buy right here, it's sitting right on the 99 EMA. If I buy right there, my SL can go it's right there. I think I gotta do it. Shit. Oh, I don't like taking out so many higher risk positions, but I'm doing it. Alright, I'm jumping into FTM2. Or, sorry, FET. I'm getting into FET. Everybody understand exactly why, right? Alright. Maybe I'll get one low risk setup, and that'll make me feel better about taking on so many. Well, I mean, it's not like I'm taking on high risk trades. Still, I mean, the trades I'm getting into, my stop loss is always within 2.5% of my entry. So it's not terrible. a little bit more. If we can get a little bit lower, just a tiny bit, I can lower my overall average entry, so that's good. So again, when I take these trades where my stop loss is 2.25% below my entry, it's not high risk. This I'm classifying as medium to medium high risk. And if it was 3% below my entry, I'd say it's a high risk trade. But in some cases where I take a trade like this, it looks like there's a really good chance it's going to hold and bounce from that support structure. But also consider that if we do break out, look at the way we've moved in the past, and that's something you should always look at. If you're looking at getting into a potential trade, go and look how that particular asset has behaved in the past, but look for other commonalities. So if you identify that ABC token, say BNB or TRX or XRP, any of these, if you notice that usually after a correction to the 618 or 50% Fibonacci retracement, the next bounce on the next wave up starts out with a really big wave one that's takes you right back up to the prior local high, right? But you look closely and you see that when that happens, there's other variables at play, right? So you have to really pay attention. You could also say, like, well, when that happens, it doesn't happen that way if BTC is bearish. It only happens that way if BTC is bullish. You need to be able to track all those things and look for those other signals. You don't want to focus just on one thing. You don't want to just look at the chart and say, oh, I'm buying here because there's a support. You want to buy on that support, but then you want to look for some sort of indication as to what has happened in the past when all those variables were in the same position, right? So think of it that way. Think of, you have 10 different variables. What's the weather outside? Like, at a football game. So what's the weather outside? How many guys on the team are on the injured reserve? What's the QB's QB rating, right? Think of a football team, and you can come up with all those variables, and then you can predict what will happen. That's what sports handicappers do. They predict exactly what the score of the game will be by looking at all those variables. You're doing the same thing, but you're doing it with, this is your data set, right? This is our data set. This is our church, unlike theirs, which is the gridiron. We're working on this data, and we're trying to factor in all of that stuff. If you can look at it, you can identify those patterns, you can predict the future. And that's why I love to joke about having a time machine, because that's essentially what we do. I'm predicting the future. Like, what did I do with Ethereum? I predicted we were going to go on a bull run to the top of the weekly cloud. There's nobody else out there who can go back to a live stream from 2 months ago that predicted the exact target of this bull run. There's just no one. There's no way. The probability is just so freaking low. I mean, there might be a couple guys out there who did, but part of it was luck, to be honest, but a lot of it was just my model happens to be really simple, so it's very easy to identify those patterns. I can very easily identify in the past what has happened based on those variables, because I use so few variables that are so easy to identify. And in this particular case, like I was saying, if we do break out, look what will happen. There's a really good chance we're going to get a big breakout. Let me show you the last time we had an ascending triangle. Right here. Right? Boom. Boom. The last time we had an ascending triangle like this, we broke out and went on a run for 40%. And that was just a few weeks ago. Same thing here. If we break out from here, we very well could go on a run up for 40%, which would bring us all the way up to 77.50, right? So there you go. That's a perfect example. If you can identify these patterns in the past, you could use that to predict the patterns in the future. And if we can get even remotely close to what happened on that last breakout run, I can make a lot of money on this trade, so it's obviously worth the risk. 2.25%, it's not a huge amount of risk. A lot of people set stop losses that are 10% below their entry. So risk management is important. It's important you don't waste all your money that way by setting stop losses 10% below your entry. Now, there are other things that look bullish, but they're all just kind of on the risky side. I haven't spotted many that are in a good low-risk position right now. And a lot of these, you can see a lot of them are red over here on the watch list. That doesn't necessarily mean anything. It depends when that particular candle restarted. That counter restarted, rather. Some of them restart on the daily, some at other times. Yeah. It depends what the website's doing usually. So yeah, looking at all that stuff, that's right, at least right now you can see if you go down and look at a lot of these are in the middle of a correction right now, and we haven't bottomed out on the Stoke. Like here on ORN, right? Or on Matic. Matic is correcting and coming down. The Stoke hasn't bottomed out and turned back up. The price hasn't bottomed out and turned back up. In the case of Matic, given how the 99 EMA is held lately, there's a pretty good chance it's going to bounce up from right here. But I'm just not willing to take that chance. But it definitely looks like it very well might. There's also a head and shoulders, so I'd understand if you're hesitant to get in. I wouldn't mess around with Matic right now. I would stand back and just let her do her thing. Oh, yeah. All right, I'm going to call it quits, guys. Am I trading the turtle star? What do you mean you're trying to figure out the clouds? Let me know what questions you have in English. If anybody has any questions, you can hit me up on Twitter or hit me up in Discord. If you're not in the Flux Trading Group private group, then you could join the group for free. I mean, it's just you could join the Discord server for free. You can't access all the good content, but you could join the server for free, and then you could reach out to me in the public chat if you have any questions or anything. Um, but yeah, everybody else, um, if you have questions, hit me up anytime. All right. Well, thanks for stopping by. It's a good thing I ended up accidentally making it a public live stream, although it's 2 hours. I wasn't planning on running for 2 hours, but there you have it. Like I said, algo, not worth the risk. It's still going down, so staying away from that. And yeah. Oh, I never ended the stream. Oh man, dude, I'm too tired. I'm sorry. I'm going to sleep, man. We'll have to do it tomorrow or something. I'm like half asleep. I was just staring at my phone and not even paying attention. I didn't even realize I didn't end the stream. All right, I'll do some more charts and updates tomorrow and everything. All right, guys. Later.